Hello everyone, welcome to EduTap. So in today's session, we are going to discuss a very important finance news article that the Securities and Exchange Board of India has proposed the norms for the ESG rating providers. So we will see that what this norm, what this discussion is all about and why SEBI has to bring the norms for the ESG rating providers. So now before starting with the session, please subscribe to our YouTube channel if you are new to the channel and join our Telegram channel for the PDF of this session. And you can get the link of the Telegram channel in the description box below. So now starting with the news article that the markets regulator SEBI has proposed a framework to regulate the ERPs, that is the ESG rating providers. Okay, ESG rating providers are called ERPs. So to regulate the ERPs, this kind of framework has been brought, and only SEBI has said that the rating agencies will be the credit rating agencies, that only the credit rating agencies and the registered research analysts will be allowed to provide the ratings now for the ESG ratings. Okay, so before, like, anyone could have provided, any organization company was acting as the ESG rating providers, but now SEBI has said that only SEBI accredited entities can provide the ESG ratings, that is the credit rating agencies and the registered research analyst, and that also they should have a minimum net worth of rupees 10 crore. They would be eligible to be accredited, to be allowed to work as the ERP. As well as if any company wants to get the ESG rating, they can only get it from the accredited ARP, that is the allowed eligible ERP under the SEBI. Okay, so this is the criteria that has been said, that now ERPs can be who? Who can be ERPs now? The credit rating agencies and the registered research analyst who has a minimum net worth of rupees 10 crores. So why this SEBI has to take such a step? Why the SEBI had to bring a separate proposal for regulation of the ERPs? First of all, ERPs are not subject to any regulatory oversight. They are not regulated by any authority. Let it be RBI, let it be SEBI, or any other authority is not regulating the ERPs. So ERPs, that is the ESG rating providers, were doing whatever they can. Okay, they were not going through a set framework. So it posed concerns about the potential risk on the investors' protection. Okay, because SEBI's main work is to look after the investors' protection. So in the securities market, the transparency was not there, the efficiency of the market was not there, and risk pricing was there. The capital allocation was also very bad. See what was happening, that a company was getting the ESG, that is the environment, social and governance ratings. Okay, ESG is, E refers to the environment, S refers to the social, and the G refers to the governance. That how well the company is doing in the environmental terms, how less it is harming the environment, how well it is doing in the social terms, how well it is doing for the society. Is it providing better services for the consumers or not? Okay, it is providing better services or better work it is doing for the consumers or not. The governance means how well the company's policies are, how good the governance of the company is. So if a company wanted to get the ESG ratings, it had to get the ESG rating from the ESG rating providers in the securities market. So the ERPs were not under any regulatory framework, so they were giving they even took the higher money, they even took more money from some of the companies and gave the higher ESG rating to those companies. Even if they were doing badly, very bad for the environment, even if their customer service was not good, they were doing very bad for the society, or their governance was not good, still they were getting higher ESG ratings due to the higher money they were providing to the ERPs. Okay, and the ERPs were not also doing good justice to the ESG ratings in terms of their methodology. So what happens, that seeing the higher ESG ratings, the investors were putting their hard-earned money into those companies, that okay, these companies have good ESG ratings, means their governance is good, they are doing good in the societal terms, and they are doing good for the environment also. So the investor protection was getting risked at that time. Okay, maybe the company was very bad in the governance and the company goes down. So seeing the higher ESG rating, the investors that have put their money will go down. So that is why it was very risky for the investor protection, for the capital allocation, that actually the companies that are doing good in the ESG, they were not getting much capital from the investors, but those companies were getting more capital, those were not doing actually good but have higher ESG ratings. So moreover, a lack of transparency in this area gives rise to the risk of greenwashing. Greenwashing means that a false impression, misleading information is provided to the consumers that these companies are doing good for the environment, they are providing the environmentally friendly products. So this kind of risk of greenwashing and misallocation of assets, which could lead to infirmity in such ESG ratings, that is more money is going to the companies that are actually providing wrong information. Okay. As well as further, SEBI said that given the unregulated nature of the ESG ratings and the ERPs being unregulated, being in the unregulated space, they are unregulated currently. So many ERPs offer services other than ESG rating also, because there is no set framework. So they are providing whichever service they can provide, okay, other than the ESG rating also. They are the ESG rating providers, but they are providing other services than the ESG ratings. As well as, see, in the consultation paper, this consultation paper is a result of SEBI's discussion. SEBI discussed with different stakeholders, and that brought to the notice of the regulator, that brought to the notice of the SEBI that the ESG rating providers or the ERPs are rating hundreds of publicly listed companies and just providing them the ESG ratings. Just providing them the ESG ratings without actually following a set methodology. Okay, they are just giving the ESG ratings, higher ESG ratings on the basis of the public information that is out there. They are not, the ESG ERPs are not actually doing any work, and they are just providing the ESG ratings on the subscription basis, that how many subscribers, how many investors are investing in that company, okay, how many investors are looking into that company. They are not checking the environment methodology, they are not seeing how well the company is doing for the society or how well the company's governance is. They are just giving the ESG ratings on the basis of the subscription, and that is a very wrong thing. So that's why SEBI had to bring a regulation for a regulatory framework for the ESG rating providers. What are the other proposals? So SEBI has proposed that ERP should offer at least one of the rating product. Okay, the ESG rating provider should at least provide the rating products now, and the first rating product is impact rating, ESG impact rating, that how the company is impacting the environment, how the company is impacting the society and all. As well as the ESG corporate risk rating. The other product is risk rating. So now risk rating means that how the company can handle the risk that is coming from the environment, that is coming from the society, or that is coming from the governance. Maybe there might be some problem in the governance. So can a company handle the risk? So this tells us, see, impact tells us that how the company is impacting the ESG, and the risk tells us that how the company can handle the impact from the ESGs, from the environment, from the society, and from the governance. And any other ESG related rating, if they are providing, they can become a ERP. Okay, ERP should at least provide one of these services. So in order to avoid any confusion among stakeholders, ERP should always use proper terminologies. Until now, they were not using any proper terminologies. They were using any symbol, any definition they wanted. There was no set methodology, or even if there was a set methodology, their terminologies were differentiated. So ERP should always use proper terminologies for the products offered by them and disclose on its website that which terminologies they are using for what. And in the ESG rating reports also, they have to tell that this terminology we are using for this. They have to tell the symbols and their definition, that what symbols they are using for what and what definition they are using for what. So they have to tell it under the website, on their own website also, and their rating reports also. Any definition, any symbol that is used by the ERP, they have to tell in the website and in the report also. SEBI has also proposed that ERP should be mandated to follow a subscriber pay business model. That is, I as an investor want to know about a company, that how well a company's governance is, how well the company is doing for the consumers. Are consumers happy with the company's service or not? So how well the company is doing for the society, how well the company is doing for the environment. If I as an investor want to know, I will pay the providers, I will pay the rating providers to know about that company. So that is the subscriber pay model. That is when the investors pay the ERPs, so that the ERPs provide the information to us that how well a company is doing. In this way, the investors are getting benefit because we are paying, so the providers will work for us and will provide the correct information that yes, this company is good or not. So this is different from the issuer pay model, in which the company pays the ERPs, and if the company pays higher, the ERPs might give higher ratings to that company. So the issuer pay model, in which company pays the ERP. This is the issuer pay model, and the subscriber pay model is in which the investors pay the ERPs to know about a specific company, that I want to invest my 10 crores, my 100 crores into this company. So should I invest? Do it have a good ESG rating or not? Okay. So now this is the question that recently market regulator SEBI has proposed the framework to regulate ESG rating providers. Which among the following are among the proposals of SEBI? So which of these are proposed by the SEBI? And this is an easy question. Now I hope you can answer it very easily. So the Bala, Kiran, Vijay, Manoj, Monica, Neeraj, Yash, Suresh, Shivam, Mintu, Vitthal, Sonia, Lavu, Rashmi, Khatri, Rashmi, Arvind and Gangandeep has given the right answer of the previous session question. So well done you guys, and if you have any query related to this topic, you can mail us here or you can contact us through this number. So any query you can mail and contact us. So thank you very much, and I hope you have understood the news article. So thank you.